Well, joining us now to tell us more about the pros and cons of investing through apps or advisors is Mr. Thomas Caldwell, Chairman and Director of Caldwell Securities Limited. Sir, welcome back to Forum Daily. Always great having you on the show.
Thank you, Nima.
Now, investors have been focusing on apps lately to help them navigate their lives, especially when it comes to trading apps. So what are your thoughts on this evolving world of investing?
Well, there's so many applications out there, but first thing is there is no magic box for investment success. Otherwise, we get rid of a lot of people and just have boxes sitting around here. Yes, you can operate at speed. Speed is not that critical, really. In fact, for me, usually when I rush to do something, I'm making a mistake. I think speed of execution, transaction costs are not the critical determinants of investment success. Transaction cost is really not a relevant thing unless you're a high-speed professional trader, and most people are not that.
And how does investment through an app compare to using an investment advisor, especially in the long run?
Well, I could look at it. I do both. I can trade on my screens and do whatever I want, but that's not the real component of making money. The real component of making money is ideas, and good ideas, refining ideas. And with all due respect, they don't necessarily come from the media. They come from bouncing ideas back and forth with other professionals and refining ideas. So I think from that perspective, it really does make sense, for me at any rate, to have a collegial approach to generating ideas and refining those ideas. Executing them is kind of the final step when you've worked out the first point.
Now, you often talk about quelling your emotions when it comes to investing. So can you tell us a little bit more about this? What does this mean, and what do emotions have to do when it comes to investing?
Everything. If I look at the number one factor, and this is for retail, I have no emotions. I've been at this so long, I'm like an offshore shark, just cruising around looking for opportunities, and I can be up and down tons of money in a given day. I'm used to that sort of thing. But most people, retail investors, may lose money on the basis of their emotions. Either they get frustrated or they get panic stricken out. For example, during the March collapse, during the initial COVID impact, oh my God, get out of the market, the world is ending. Whereas me and people like me just cruising around are looking for opportunities. And every time I see a real downdraft in the market, I just go through the ashes and look for the opportunities. So that means emotions. The best way to quell emotions, and I'm not saying I'm totally devoid of them, I'm not, but the best way to quell emotions is, for me, I talk to my partners, our traders, my associates, and I think that's very important. The talking to someone else helps you to quell. Listen, when you have a personal problem, sometimes talking to someone else helps you to work through it, and that's certainly the case with investments. I've seen more money lost from emotions than any other factor, and the best way to quell your emotions, talk to somebody.
So as you're saying, you're a firm believer when it comes to teamwork and bouncing ideas off of each other. Why is that important when it comes to helping clients with investments?
Well, there's two consultative processes. First off, there's our internal consultative process, whether it be reviewing research reports, discussing, and research reports don't generate much, that's background, but really bouncing ideas, because ideas travel verbally, really. And then it's the internal refining of the idea, and then also discussing it with the client. I mean, I had a discussion with a retail client the other day who wanted to invest some money, but he hadn't thought through it, that he may need the money in 6 months. And I said, I can't handle short-term volatility if I'm dealing with a 6-month horizon on a portfolio. Better off just to buy a note of some kind. So part of that is that he could make a big error because the market could go down 10% tomorrow morning. And I can handle short-term volatility like that if I have a year or 2 years to work on a portfolio. But a matter of months, I can't do it, and it's too risky for the client. But clients don't think of this. So I think that consultative, discuss it with someone, refining your ideas. And very often when I do that, I hear myself talking. And sometimes I don't even buy into my own ideas, but I need that process of just bouncing it back and forth.
All right, sir, just about 30 seconds left, but what would be your advice for first-time investors that are contemplating either using an app or investing with the help of a professional?
Well, I really do think people tend to stay away from our business because they, I don't have enough money to do it, or I don't someone's selling me a product, et cetera. A truly professional investment advisor is that, an advisor. And you got to find I think it makes sense to phone a firm, an IROC firm, Obviously, I'm biased, Caldwell Securities or whatever, but to call someone and talk to an advisor